Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX.
Boom, and we're live. Good day, good morning, good afternoon, everyone, and welcome to another busy day in the markets with Dot Financial News. I'm Andrew Marina, and this is what's happening in the markets today, 14th of September, 2021. The US stock markets are expected to open almost flat today after recovering somewhat following Friday's sell-off, with the Dow Jones Industrial Average, the S&P 500, moving pre-markets open to the upside just about 30 basis points. Crude oil WTI prices rose 0.7% overnight as the hurricane season causes shortages in the Gulf of Mexico, and the U.S. government data shows just under 800,000 barrels a day of output being held back from Gulf platforms. While the crude oil inventory is announced tomorrow, investors will be looking for more hints from the API data announced later today in the U.S. trading session. More help for crude oil prices might come from the Organization of Petroleum Exporting Countries as the oil cartel raised its positive demand outlook for crude oil. So buckle up, everyone. We might be riding the crude oil to the upside to $100 by the end of the year if things continue like this. Now, the euro traded lower on the European trading session today, touching the 118 mark briefly. And Matt Hornbach at Morgan Stanley said earlier today on Bloomberg that the Euro-USD pair might see the 114 level touch in the upcoming months. However, as soon as the key inflation data came out minutes ago from the US, we saw a big boost in the euro, the pound, and other currencies, which I'm going to share with you in just a few minutes. For the moment, the euro is trading at 118.43, gaining a bit after the inflation data coming out from the US. The British pound seems to be doing the exact same thing as the euro. We saw the pound following the euro today to the downside, even though the UK claimant count fell by 58,600 in August. But with the unemployment rate remaining at 4.6%, the pound seems to be finding it difficult to climb today. That was again until a few minutes ago when the inflation data announced from the US gave the euro and the pound a boost to the upside. Let's see what's happening with gold futures. We saw gold futures trading to the downside today and tanking sharply on the European trading session. But again, everything changed minutes ago once the key inflation numbers came out from the US front, giving gold futures a boost, trading at $1,798.55 an ounce as we speak. Now, cryptocurrencies also traded a bit to the upside today, with Bitcoin holding steady around the $46,000 mark and Ethereum gaining a bit as well and holding steady around the $3,354 mark. Now, before we get started with the US markets open, guys, I want to rest assure everyone that's watching our daily live broadcast that anything you hear or see during our broadcast does not represent investment advice nor a solicitation to buy or sell contracts for difference or cryptocurrencies. Please note that financial instruments are complex products that carry high risk, so you better do your own analysis before making any investment decision. And of course, if you like what you see, please don't forget to like, share, subscribe, and support us in delivering more great content. From Europe to South Africa, from Limassol to Cape Town and London, this is Dot Financial News, guys. US markets open coming up. Right. Good afternoon, beautiful people, and welcome everyone to the markets before the opening bell. We are only 20 minutes ahead of the US markets open. We had some data announced today in the economic calendar, and we're going to see more data and more volatility happening once the US markets open today. But before that, I just want to show you a couple of very important news regarding very important assets, and then do a bit of chart analysis, and see how the markets performed today, yesterday, and what might be expected to happen for the week. Now, if you like what you see, like, share, subscribe, and support us in delivering more great content. If you don't like what you see, please subscribe to our channel just to annoy your friends. Right. Now, the breaking news that we had earlier on was this one. Consumer prices in US increased by less than forecast. This came out from Bloomberg a few minutes ago, shortly after the inflation numbers were announced. Let's have a quick look at the inflation numbers first in the economic calendar. There we go. This is what we were talking about. Let me zoom in. There we go. Yeah, so we're looking at core CPI year over year for the month of August coming out at 4%. Yeah, in red, we're looking at the core CPI month over month again for the month of August coming out 0.1% versus a 0.3% expectation from consensus. We're looking at the CPI for the month of August coming out at 0.3%, just 1 basis point below what economists were predicting. Also, the manufacturing sales coming out from Canada disappointed a bit. They came out negative 1.5% versus an expectation of a negative 1.2%, and obviously versus the previous positive 3.6%. Okay, this is what's happening. We saw the impact on the charts, and I'm going to share the impact with you in the next few minutes. Right, the prices paid by US consumers rose in August by less than forecast, suggesting that some of the upward pressure of inflation is beginning to ease off. The consumer price index increased 0.3% from July, according to Labor Department data released minutes ago. Compared with a year ago, the consumer price index rose 5.3%. Excluding the volatile food and energy components, so-called core inflation climbed 0.1% from the prior month and 4% from August 2020. Economists in Bloomberg survey called for a 0.4% increase in the overall CPI from the prior month and 5.3% gain from a year earlier based on the median estimates. But it didn't come out as expected, guys. Now, we have another important event. Let's talk a bit about some positive news, guys. We have another important event. Apple gains ahead of a key launch as it tries to put security flaw behind. Apple is launching today a new Apple Watch. Okay, they're going to be announcing a few changes, but unfortunately, they will not be announcing anything regarding the new Apple Car, which everyone is asking about. So Apple starts a very big annual event today. It's going to happen at around 8 o'clock, 2000 hours UK time. 1800 hours, 6 o'clock UK time, 2000 hours Europe time. The Apple stock traded 0.3% higher today pre-market ahead of the company's biggest launch event of the year. Sorry, not ever, just of this year. The world's largest company is expected to announce today new versions of the iPhone, the Apple Watch, and AirPods. Media reports have ruled out major updates to the iPhone, while improvements to cameras and batteries are expected as well. True to its past form, the company is unlikely to talk about any product still in its pipeline, including the rumored car project. A report in the Wall Street Journal earlier said that the company is working on new health-related features for its smartwatch, including a tool to tell users when their blood pressure is increasing. This is a very, very interesting news. The Apple Watch could also host a thermometer to help with fertility planning, the report said. Again, very, very good news for whomever needs this kind of help from the Apple Watch. The company could use a lift after two setbacks in quick succession. It confirmed on Monday that the iPhone, much touted security, had been breached by a hack exploiting weaknesses in its iMessages app. Citizen Lab, an academic research group, said that Israel-based NSO Group used the messaging software to exploit and infect the company's latest device with spyware. The flaw allowed the hacker using NSO's Pegasus malware to gain access to a device owned by an unnamed Saudi activist, according to security researchers. Apple said the flaw could be exploited if a user on a vulnerable device received a maliciously crafted PDF file. The news came only days after a court ruling that weakened Apple's defense of its monopoly on payments with its App Store. While the company doesn't break out its payments revenue, analysts estimate it at around $18 billion in its last fiscal year. Wow, great news for Apple, guys. I'm really curious to see this event, and I'm curious to see what sort of price will Apple announce for the new iPhones, for the new watches, and for the new AirPods. As we all know, Apple products can be quite expensive. Yeah, especially the brand new ones. Right, now we have some more news. Apparently, the offshore oil platforms. Let's have a quick look at crude oil WTI while we talk about what's happening in the Gulf of Mexico. There we go. That's crude oil WTI price, $70.95, a few minutes ahead of the opening bell. The offshore oil platforms were evacuated yesterday as Tropical Storm Nicholas strengthened into a hurricane, prompting President Joe Biden to declare a state of emergency for the state of Louisiana in the U.S. 2 weeks ago, it was Hurricane Ida that caused the mess in the Gulf of Mexico. Now, Nicholas, we know this usually happens end of August, beginning of September every year, and the Gulf of Mexico will be shut down for a few days, causing quite a bit of volatility in crude oil prices, natural gas, and other commodities that are related to crude oil. More than 40% of the U.S. Gulf's oil and gas output was still offline even before Nicholas' arrival, according to an offshore regulator, Bureau of Safety and Environmental Enforcement. So let's see what's going to happen. Now, this basically sent crude oil WTI price flying. Look at what happened with the crude oil WTI price in the last week or so. Yeah, we can see a gain of over $3. Okay, over $3. Yeah, in crude oil WTI prices in just a few days. Now, as I was telling you earlier on, I have another interesting news that I want to share with you. Just give me a second to try and find it. There we go. Yeah, the other news that got my attention today was that the UK is running out of workers after the Brexit happened. So let's see how this Brexit impacted the UK's economy, and the labor force in the United Kingdom. The UK labor market continued to improve, bringing the day when the Bank of England will tighten monetary policy a little closer. July data for employment showed the number of payroll employees in the UK has now exceeded its February 2020 level for the first time, although that number is likely to come under pressure in the next 2 months or so as the government's job retention scheme comes to a close. Of more significance, arguably, were numbers showing over 1 million vacancies in the country for the first time ever, a testimony to severe shortages of labor in areas such as truck driving, agriculture, and increasingly hospitality. All three sectors were heavily employers of European citizens whose automatic right to work in the United Kingdom expired with Brexit. Such shortages also ensured that wages kept rising. Average earnings were up 8.3% on the year. So this is what's happening when basically the cheap workforce gets kicked out of the country or is being refused the right to work. The locals that were avoiding to do those jobs until now will probably now ask for more on their paycheck, trying to replace the East European workers that were more or less kicked out of the country once Brexit happened. So let's see what's going to happen. Also, inflation is rising, so it makes a bit of sense for people to ask a bit more on their paychecks, in order to tackle the inflation. Right, let's see what's going to happen. Let's take a 2-minute break. We are about 10 minutes ahead of the opening bell. Okay, I'm going to do a bit of chart analysis about 10 minutes ahead of the opening bell. So stay with us. We're coming back live in exactly 2 minutes from now after the adverts. Right, welcome back everyone after the short break. We're exactly 10 minutes ahead of the opening bell. Let's do a bit of chart analysis on the most traded assets today. I want to focus on a daily chart, and I'll explain to you why in a few minutes. It's very, very important to understand the bigger picture, and what I'm trying to understand basically by doing this daily chart analysis is seeing if the asset is priced high or low, in comparison to the average price of the asset. You will understand how it works in a few minutes. So I want to start with crude oil WTI today. Okay, we're looking at the charts on a daily chart. So that means every candlestick, green or red, that you see on the charts represents 1 day. The candlestick will fluctuate the entire day, the entire 4 trading sessions that we have, and it's going to close at a different price. Next day, another candlestick opens, and so on. So we can see that for the last 3 or 4 days, 3 days in a row, crude oil WTI is gaining. We saw crude oil WTI price settling above this price at $67.63, and since then it started trading to the upside. Now, if I zoom out a bit, you can clearly see the uptrend that crude oil WTI has started on the 21st of April last year. Do you remember that time when crude oil prices dropped to zero or in the negative territories as due to lockdown measures and so on. There was an accumulation in the storage, and the storage basically had to pay to get rid of the excess. That was kept in the storage. So since then, we saw crude oil WTI gaining, and it started. It reached all the way up to $77.33 in July, on the 5th of July this year. Now, from there on, you can see that after such an uptrend, we saw a bit of a pullback in crude oil WTI prices as we saw that the fourth wave of this pandemic was affecting parts of Asia, was affecting Europe as well, and was affecting also big parts of the US. Okay, once that situation slowly calmed down, then we saw crude oil WTI price rising a bit. Now, in times like this, we're looking at the relative strength index. If we like to trade based on indicators, and long term, we need to see if the price is overbought or oversold. Now it's somewhere in between, pointing to the upside. So we might see it trading even higher. In times like this, probably traders will set their take profit targets a couple of dollars higher. As looking at the price right now, we can see the price trying to break through a support level. So if that's going to happen, then probably the price will trade a bit higher. So we're going to keep an eye on $73.96, almost $74 a barrel, and if that level will be broken, then again, we're going to be looking at 76, 90, 77, somewhere there in that region. But we still have a bit of way to go. Let's see what's happening with the euro. Again, on a daily chart, the euro seems to be recovering somehow, although it's trading quite high, comparing it to the overall movement. There we go. Okay, so from what we see now, the euro seems to be pushing higher on the back of a weaker US dollar. Okay, it's not what's happening in Europe that's making the Europe trade higher. It's what's happening in the counter currency, which is the US dollar. So what's happening in the States probably has a bit of an impact on the strength of the euro. Also, if we look at the charts like this and we zoom out a bit, we can mark the average highs and the average lows. Okay, and from there on, we're gonna try and narrow it down as much as we can, in hope for a better direction of the markets in the days to come. Okay, this is how you analyze the charts on the long run. So what do we see here? We see a double top happening here. Okay, we see a retest of that resistance level. From the euro. Okay, followed by a bounce to the downside. Now, the good news is that on this occasion, we don't see the euro falling below the 50% mark, okay, which is this one. If you were to draw a line from left to right or from right to left, and mark the 50% mark, we can see it bouncing again from there, which indicates a bit of strength on the euro versus the US dollar. Also, what's worth noting is that the euro is trying to recover from this huge drop that happened in June, in July, and in August. Okay, we can see the euro starting to recover a bit there. Okay, on the 19th of August, we saw the euro pushing to the upside. But this was it. It bounced off the 119 mark, 119.07, somewhere there in that region. So on the long run, we might see the euro trading a bit higher. Okay, so keep an eye on the 119 level, and if that level will be broken, then probably, we're going to see the euro rallying, for the 120 or the 121. Okay, let's see what's happening with the pound. There we go. We can see the pound recovering, okay, after touching the support level here at 136.45, 47, somewhere there, multiple times. We see 1, 2, 3, 4 retests of that level. Now, what you can try and do again is try and break it down, marking the average highs and the average lows. So I'd say somewhere there, okay, in that region, we can see some average highs, okay, and Some average lows. Yeah, again, the center line, guys. See how important the center line is. See how important it is to trade the charts bit by bit. Okay, without jumping the gun. So, yeah, again, looking to the upside for the pound versus the US dollar. Yeah, we can see the pound having a very important resistance level towards the upside at 139.83. Okay, so far so good for the pound. We can see the pound exceeding, the center line here. Okay, once again, and aiming towards that 139.83 level. Once again, looking at the bottom of the charts, we can see the relative strength index pointing to the upside, and indicating a bit of an uptrend after it didn't touch the lows for quite some time now. Okay, so the pound might head for that 139.68 mark. We're 3 minutes ahead of the opening bell, guys. I'm gonna hurry up a bit. There we go. USD JPY. Why is this very, very important? We can see the US dollar on a daily chart. The US dollar started an uptrend on the 27th of January this year. Okay, it reached an all-time high this year at 111.69, and since then it started dropping. Let's see, where is the support level? There we go. Very important support level around the 109.14 mark. Okay, very important support level where close to where the price action is now, somewhere there. Okay, look what's happening. We can see the US dollar set to trade to the downside versus the Japanese yen. We can see the relative strength index turning around from the 50% mark. Usually that's a sign of weakness in the markets. Okay, if anyone has any questions, please feel free to type your questions. This is an interactive talk show. I'm just speaking like a robot because no one is typing questions, but as soon as you type questions, I'll stop. So if you want me to stop, please type questions. Right, so we're looking at the relative strength index pointing to the downside, and we can see a bit of weakness on the USD JPY pair on a daily chart. Okay, so you can, some traders will go for a short position. We'll see an opportunity on going short now at 109.83. All the way down to 109.68. It's about 20 basis points. If your position is decent, you could get a bit of profit out of it. Right, we can see the Aussie dollar strengthening again versus the US dollar, and this started on the 23rd of August. Okay, there we go. Very, very important support level somewhere there for the Aussie dollar. Okay, we can see the candlestick formation settling above that level, which is 0.7325, 0.7327. Okay, 20 basis points below the current market price. Now, if we were to go by technical analysis, whoever understands the Elliott waves, those 5 waves that we see with 3 upward waves and 2 pullbacks. So this could be the first wave. Okay, we can see the pullback, which is the second wave. Now, going by technical analysis, we might see the third wave, the third rally, which if we look towards the left, we can kind of predict, because this is what trading is. It's a game of averages. It's a prediction game. We can see it there. From there, we might see a bit of a pullback, because this is what happens after a rally, and then finally the fifth wave, the fifth rally. So wave 1, wave 3, and wave 5, are the upward waves. Wave 2 and 4, are the pullbacks. And usually traders, technical traders tend to follow these guidelines, when it comes to entering a position. So we might see the Aussie dollar strengthening a bit more versus the US dollar, if either we get very good news coming out from Australia, or a very bad news coming out from the States. Now, we are already into the US trading session. Let's have a quick look and see how the markets opened. I'm going to start with the S&P 500 and the Dow Jones, which opened to the upside. There we go. Positive opening for the S&P 500 and the Dow Jones. 4480.76 for the S&P 500. And let's see what's happening with the Dow Jones. $34,930.26 current market price for the Dow Jones Industrial Average. There we go. We saw that positive opening that we were talking about. We got a hint that the markets will open to the upside as the Dow Jones and the S&P 500 both moved about 30 basis points to the upside before the opening bell. Right, let's see now what's happening with some stocks, guys. Shortly after the opening bell, there we go. Yeah, I had some stocks ready for you. Let me just kill these pop-ups that absolutely destroy my stream. There we go. Apple rose 0.2% with the world's largest company expected to announce new versions of the iPhone, the Apple Watch, and AirPods later on today at around 6 o'clock UK time in what will be its biggest launch event of the year. Oracle stock fell 3% after the software company's first quarter revenue came in below estimates, with its cloud license and on-premise license business hit particularly hard. The company also said this quarter revenue would only be up around 1% on a year ago. Amazon fell 0.1% after the world's largest online retailer announced plans to hire more than 125,000 warehouse and transportation workers in the United States, hiking its average starting wage at $18 per hour, up by around $1 per hour. General Motors fell 0.2% following the auto giant's venture capital arm announcing it has invested millions of dollars in Oculii, a U.S. startup maker of software for radar sensors used in self-driving cars. Herbalife stock fell 9%, guys. Now, this is a drop. 9% drop after the maker of dietary products cut its outlook way by lower than expected levels of activity by its independent distributors. Now, right, is anyone still involved in Herbalife, guys? Because I know it was a big deal years ago, and so was Amway and California Fitness and all sort of pyramid schemes like this. Is Herbalife still interesting? Are people still invested in Herbalife? Let me know what you think in the comments down below, and maybe you can help me bring some light on this matter. The last but not the least, guys, Coinbase stock rose 1.4% following investment bank Piper Sandler reiterating its stance at overweight, saying investors should buy the dip in the cryptocurrency exchange operator. This is what's happening with the stocks, guys. Let's have a quick look and see what is happening with the stocks after the opening bell on the trading platform. Okay, and we can see Apple opening higher. There we go. Very good buying opportunity for Apple from what we see on the charts. Okay, let's see how Amazon opened. There we go. Yeah, we can see Amazon opening to the upside. However, be careful, guys, because usually gaps like this tend to be filled. Okay, so if you want to scout the markets, it's entirely up to you. I would prefer personally to let the markets calm down a bit before I enter a trade. But who am I to tell you what to do? I cannot give you investment advice. $222.60 for NVIDIA this afternoon. Positive opening for NVIDIA. And we see a green candlestick right now. Probably traders will go for the correction. Yeah, up to $229. Who knows? We might see it happening today. Let's have a quick look at the US dollar index, guys, which tanked sharply at the opening bell. Let's have a look at it on a 1 hour chart. There we go. As soon as the inflation data came out 1 hour ago, we saw this red candlestick. Okay, this red aggressive candlestick pushing the US dollar index all the way down to 92.298. We see a shy correction starting here. A bit of buying is happening there after the opening bell. Obviously, buy the dip. That's what investors do usually. Let's see what's happening with gold now. There we go. We saw a bit of fluctuation in gold as the US dollar index tanked after the inflation announcement. We saw a bit of a spike in gold futures, which again now are correcting. Okay, 1,796.75 for gold futures this afternoon, with the RSI pointing downwards. We see the stochastic oscillator at the bottom pointing upwards. So there might be a bit of divergence between indicators there, but yeah, for now, we can see gold trading at 179,575. Let's see what's happening with Brent oil futures, which followed crude oil to the upside for the entire week last week. Yeah, reaching highs of $74.26 earlier on. Yeah, 74.05 is the current market price after the opening bell. We might see a bit of a pullback, a bit of a correction in the markets. Okay, and that's normal. The U.S. markets will tend to calm down in a bit of time from now. Silver, very similar trajectory to golds. We saw silver spiking about an hour ago once the CPI data came out on the US dollar, and now we can see silver heading to the downside and correcting basically after that green candlestick. $23.70 for silver futures this afternoon. It's interesting to see what's going to happen. I was expecting gold and silver to do a bit better. There we go. Tesla after the opening, $751.50 for Tesla. There we go. RSI, stochastic, both pointing upwards, and we can see the uptrend. Let's have a quick look on a 4-hour chart for a better understanding. There we go, beautiful people. There is the uptrend for Tesla. Okay, this is a trend channel. So, yeah, again, average highs, average lows, and basically people trade on what's happening in between those lines, yeah, which are called a trend channel. Right, looking at the relative strength index at the bottom, we can see it pointing upwards and not falling below the 50% mark, which is very interesting. Usually that's an indication of an uptrend, yeah, of strong buying happening on the markets. There we go. Yeah, we might see Tesla trading as high as 777 today. $743 on the dot is the current market price. Let's see what's happening with Facebook. Okay, Facebook seems to be recovering as well, just like Tesla. However, right, hold on a minute. Not that fast. There we go. We can see a triple top happening there. Yeah, there was some... there we go, yeah. Average highs, average lows. Yeah, apparently the uptrend for Facebook has ended for now as the share decided to take a breather for now. $377.03 as we speak for Facebook. This is it. Nothing big has happened just yet. We're looking at Alibaba opening to the downside today. There we go. Yeah, negative opening for Alibaba, $162.83. Okay, we might see Alibaba recovering a bit. Today we're looking at Bitcoin. Whoa, gaining $700, guys, in the last hour or so. Okay, I'm going to put this as a breaking news. Bitcoin gained $700 in the last hour, and it's now trading at $46,700.06. And Ethereum seems to be gaining as well, a bit shyer than Bitcoin. $3,364.04 for Ethereum shortly after the opening bell. Now, in theory, the opening bell, the U.S. markets open, should not affect cryptocurrencies as they are decentralized, yeah, and they can be traded 24/7 all year round. However, we tend to see cryptocurrencies reacting after the opening bell, and we tend to see cryptocurrencies reacting a lot over the weekend, Saturday and Sunday, for some reason. I'm going to try and get a crypto expert to join us tomorrow evening at my weekly special broadcast here on Financial News, and see if we can get an explanation why cryptocurrencies and Bitcoin is moving more over the weekends than and after the U.S. markets open, than in general. Now, let's have a quick look talking about cryptocurrencies. Let's take a 30-second break, and then we're going to come back with the top gainers and losers in the crypto markets in the last 24 hours. How about that? Right. Okay. Stay tuned. We're coming back live in 30 seconds with the top gainers and losers in the crypto markets. Right, and we're back after the adverts. As you saw during the adverts, we're going to have Tyron Scholtz showing us for 60 minutes starting 5 o'clock CET. Live trading with Tyron Scholtz. He's going to show us how he trades the markets. He trades his own money, guys. And again, I'm not encouraging anyone to follow his actions. Whatever he's doing, he's sharing his experience with us. So learn and observe what Tyron Scholtz is doing. Now, as I promised you, top gainers and losers in the crypto markets in the last 24 hours. I'm going to start with the gainers today because I'm in a good mood. It's the second day of existence for Financial News. So we see Rari Governance Token gaining 23% in the last 24 hours. We see Synthetic Network Token gaining 17.3%. Curve DAO gained 17%. CeeLo 15.7%. eCash, which is missing the logo from what we see here. There's a bug on the website. Gained 15.3%, Tron gained 11%, and SushiSwap gained 9.8%. But where there are gainers, there also are losers, guys. Top losers in the last 24 hours, and that's gonna hurt me a bit. Right, Litecoin dropped 23.8% in the last day. Phantom, just like a Phantom, almost 10% drop. Algo Rand 9.2%, Waves 8.1%, FTX token 7.5%. Terra or Luna is currently trading at 30 euros and 9 cents, and it dropped 7% in the last 24 hours. And Wrapped Luna token 29.95 is the exchange rate, and it dropped 6.4% in the last 24 hours. Right, very, very interesting what's happening with the crypto markets. We see the crypto markets recovering somehow. Let's have a quick look and see what happened. Who are the top gainers in the last week or so? Okay, and this is getting very interesting now. There we go. Top gainers in the last week. We see XYO gaining 127% in the last week. We see Elrond gaining 64.9%. Hedera Hashgraph 51.8% gain in the last 7 days. Near Protocol 46.9% gain in the last 7 days. Algorand seems to be doing very well with a 41.8% gain. Cosmos 35.9%, and Tezos is proud to gain 31.4% in the last 7 days. Now let's see the biggest losers of the week. No Cipher, dropped 33%. Keepa Network 32.3%. Theta, whatever that is, 31.52%. Internet Computer 28.9%. Cartesi 28.7%. Origin Token 28.4%, and NKN 27.9%. Okay, right. This is what's happening with the crypto markets. We have some gainers, we have some losers. It's very interesting. It's very important to do our own analysis before making any investment decision based on our personal circumstances. This is it from my side today, beautiful people. Stay tuned. All right, we have some comments there. Right, great new format. Thank you so much for the thumbs up. I'm trying my best, guys. You gotta help me as well. Comment, like, share, subscribe, and then we're gonna grow more and more. Right, this was it from my side today. Stay tuned. We're going to have Tyron Scholtz starting a live trading session at 1700 hours CET, or 1800 hours GMT +3. Until then, we're going to have a crypto debate, which I had a couple of weeks ago with a few industry specialists, and a bit of adverts that keep us alive. This was it from my side today. Join me again tomorrow, same time, same place, for a new round of market talks. And until then, remember to trade responsibly, and may all your trades be in the money, beautiful people. See you tomorrow.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Hi, my name is Brad Alexander, and I'd like you to join me every Monday at 1700 London time for Brad's Eye View here on Financial News. This will be an interactive hour with opportunities for you, the trader, on FX, commodities, and indices, and maybe even a bit of crypto if they let me. See you then.
InstructFX is providing free consultation and free education, not investment advice, guys. We are not giving investment advice.
This is where the problem lies. Is
Bitcoin fixes this problem.
Binary options, when they came out, were actually, I believe, a legitimate investment or trading vehicle.
The United States that's actually looking at it. So it's all about having some framework for electronic monitoring of systems. That is very important.
For me, that is where the difficult question is going to come in, under what asset class is going to fall under.
And that's, there's a lot of good people there, but there are a lot of people who are sitting, taking it easy.
It will just get messed up. Also, look where we are now. They're printing the hell out of the dollar. All of them were messed up.
It's been like Scotland the last 2 months, I tell you. It's been raining literally every day until 3 days ago.
This is where the problem lies.
So naturally, yes, we will still see these crazy moves.
Yes, regulations needed, it's welcomed.
Retail traders don't necessarily understand the big volatility, trading 1 to 5 leverage, and accounts get blown up. So
all of them were messed up.
And also, as I say, as the pension funds and all the asset managers come in, and the real retail money, they're going to come in a safer environment.
Bitcoin fixes this problem.
Necessarily understand the big volatility, trading 1 to 5 leverage, and accounts get blown up. So B-book brokers love it.
Are we going to do both? Are we going to just migrate to cryptos? What's going to happen next?
This is where the problem lies.
Bitcoin fixes this problem.
This is where the problem lies.
Bitcoin fixes this problem.
This was it from my side today. Join me again tomorrow for a new round of market talks. If you like what you see, like, share, subscribe, and support us in delivering more great content. And remember to trade responsibly, and may all your trades be in the money.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX.
Hi, my name is Brad Alexander from FX Large, and I'm sitting here in front of a picture of the City of London. I get asked by brokers all the time, why use video? What's the point? Well, let's start with what. You've got webinars, market updates, platform education, and trader education with quizzes, all designed to attract, motivate, and retain your clients. So, why is this better than any other medium? Let's take a look. Video produces far higher click-through rates and share rates in emails and social media campaigns. Viewers are 10 times more likely to comment, embed, engage, and share a video than any other type of content. 65% of viewers will click through to your website. Video added to your website can increase the chance of a front-page Google result by 53 times. Videos on a landing page can increase conversion by 80%. YouTube is the second largest search engine in the world. Think about it. Also, 50% of searches are done on mobile phones. Lengthy text is not always easy to read on a smartphone. Videos, especially videos with captions, are the perfect medium for smaller devices. I could go on, but I'm following my first rule of production: keep it short. To summarize, increase your market penetration dramatically with videos in your campaigns. Make your salespeople more effective and professional armed with videos to close the deal. And let's not forget customer support, who can cut out hours of phone calls and emails with simple how-to videos. If you want to learn more, just click here and I'll see you on the inside.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX.
And we're live. Good day, good morning, good afternoon, everyone, and welcome to the very first edition of Financial News. We're back after the summer holiday with a new look, more team members, and more ready than ever to join the new era of financial news. Before we get started, I would like to personally thank each and every one of you for supporting our project and our live streams throughout the last year or so. This rebrand wouldn't be possible without you. Also, a big thank you to everyone for supporting us, and a big thank you to the team members as well that worked very hard this summer in getting the shows ready. Before we get started, I want to rest assure everyone that anything you hear or see during our live talk shows does not represent investment advice nor a solicitation to buy or sell contracts for difference or cryptocurrencies. Financial instruments, as you know, are complex products that carry high risk, so you better do your own analysis before making any investment decision. And of course, if you like what you see, like, share, subscribe like you did in the last year, and support us in delivering more great content. With this being said, ladies and gentlemen, let the games begin. For the very first time, from Europe to South Africa, from Limassol to Cape Town and London, this is Dot Financial News. US markets open, coming up. Right. Good day, good morning, good afternoon, everyone, once again, and welcome to the very first edition of Dot Financial News. It is time to meet the team members and see what they have prepared for you. So let's start with Rian Hobson, my reliable co-presenter from the sunny South Africa. There we go. Very good afternoon to you, Rian. How are you?
Good afternoon. I'm actually good. How are you?
I'm good. I see you're very cold, man. Is it chilly in South Africa?
It was surprisingly rainy this morning, actually, when I dropped off my son. I didn't expect it. But anyway, we're still surviving the side.
So should I change my my intro? Joining us from the very cold South Africa, Rian Hobson.
No, not for long. Maybe in the next few weeks, everything will change, definitely.
Did you, how was your summer, Rian? Did you miss the talk shows?
Of course I did. Look, especially when you look at other things like natural gas, what you're talking about always, that one actually shipped up, and I wish I could explain that for you. But we are back, so I will have more for you.
Well done. You're coming back for the second quarter with a brand new show called Money South Africa, which will run every Monday and Wednesday at 1900 hours CET or South African time. Tell us more about it, Rian. What is the show all about?
It will be a bit of a twist because I will now look at the small businesses in South Africa. Those are the people who actually really do the hard work. Like I would look at your construction companies, I would look at your restaurant owners, I will look at your real estate investor, and I will actually have someone of real estate tonight. Your footwear and clothing industry is literally taking off in South Africa by surprise. If you look at the conditions of South Africa, you will think that industry would have not do so well. And then my main concern is actually the restaurant owners. And I will definitely get people on who will talk about the hospitality and leisure industry in South Africa. So I would look specifically to the small business owners because they are the people who actually literally have to wake up every day, grind everything out, and provide for their family at the same time in difficult situations. And those are the people that we need to interview. And I will do my absolute best to get the fair point from them so that they can explain how our conditions in South Africa and how the future look, especially the money in South Africa.
Brilliant, brilliant. So what will people be seeing in your show, Rian?
They will basically see I don't like to use the word the common man, but the person that literally provide for his family every single day. Wake up, go. There was one post that literally hit me hard, where one was actually posting he didn't take a salary for 74 months now straight. Only thing that he did, he took money just to cover his basic, that is his rent and his utilities. But for him to survive, he didn't take any money out of his business. So those are the people. He literally looked after his workers first before himself. And those are the people who need to be on the show, basically Monday to Wednesday. And those are the people that I want actually to interview. Those are the people who literally takes the heart out of South Africa. And those are the people I'm looking forward to interview.
I'm looking forwad to that. So today is your first show, correct?
Correct. Today at 7 o'clock South African time, I'm actually looking forward. Mololeki Property Group. He's a brilliant guy, come from the most humblest conditions, didn't even finish school. And he's doing real estate. I'm actually looking forward for an interview for him tonight. And literally we can get his perspective of how the property market is in South Africa.
All right. Spoiler alert. Yeah. Right. Rian, stay with us for a bit. And thank you so much for your intervention. Don't go anywhere because you're my co-presenter. I'll get back to you in a couple of minutes. Now, let's welcome the second guest, beautiful people. The man with the Hollywood voice, the one and only, Brad Alexander, CEO at FX Large. Brad, very good afternoon, and thanks for joining us.
Thanks for having me, and congratulations, Andrew, on the launch of Financial News. I'm looking forward to doing Brad's Eye View every Monday and helping you out where I can. It looks awesome.
Thank you so very much, Brad. It wouldn't be possible without you on board. You know that, right?
I'm going to ask for a raise then. My agent will be in contact with you. How's that?
No worries. Can I pay you in crypto so we don't pay taxes?
Well, depends which crypto.
I'll pay you in Dogecoin, of course. Now, you have your new talk show that will run every Monday at 1800 hours CET. What can you tell us about the show, Brad? What will people learn from it?
Well, basically, I like to look at every aspect of trading, right from fundamental analysis through to technical analysis, the indicators available, and what's going on in the markets. I always profess that we look at the fundamentals first, and this week we've got a lot going on. Goldman Sachs just launched a very interesting report on commodities today, just this morning. It impacts oil, copper, aluminum, depending where you are. We've got a lot going on with indices and equities. We've got a lot going on with U.S. taxes. Inflation is up this week, not just the U.S. Everybody's talking about U.S. inflation, but there's also Canadian and UK inflation. So there's lots to talk about, lots to go through. And if you let me hit, we'll talk about tennis. That was pretty awesome this weekend, but maybe not. Maybe some other show.
Right. Yes, you can talk about tennis. There's no problem about that. My only question would be if people would join to talk about tennis. Right. So tonight is your first show. Are you ready for it, Brad? How do you feel? Nervous? Excited?
No, I do webinars all the time, and I'm looking forward to this. We've got lots to talk about. My problem is getting it all in the time allotted. So we'll see what happens this afternoon. Looking forward to it.
Well, you have a good 50 minutes or so for the show, so I'm sure you can squeeze a lot of valuable information in that time. Right, Brad, thank you so much for joining us. I'll see you in a couple of hours, yeah, at your talk show.
Thank you, and we'll see you soon. Thanks.
Right. Thank you so much, Brad. Stay tuned. Right. Now, we have another member of the team that will join us every week for Incendiary Market Insights. The one and only Neil Wilson, joining us from the heart of London, Chief Market Analyst at Markets.com. Good afternoon to you, Neil. How are you?
Hi, Andrew. Yeah, I'm very well, thanks. Yeah, how are you?
It's been a while. Did you miss the talk shows?
Yeah, no, it's been a funny old summer. We've been lots happening here. Obviously, lots of time off as well, which has been really nice. So, but it's very much, I think, once that Labor Day hits in the US, you get that sense that you're back into the markets and back into back into trading properly again.
True that. How are you, and how is Markets.com doing? I hear today is a big day for Markets.com. So I want to take the opportunity to say a big happy birthday to Joe Randall, Markets.com CEO. So there you go, Joe. Happy birthday and all the best.
Yeah,
I'm
sure he's celebrating.
Sorry?
I'm sure he's celebrating with one of his homemade gins, I think.
Okay. Are you ready for the second quarter, Neil?
Yeah, I mean, there's a lot going on. Obviously, I think over the next few months, it's going to be quite an important time for the market, because we've had this sort of grind higher, particularly the US. That sort of grind higher, and it's been a market that's been well conditioned to buy the dip because of TINA, because there is no alternative. But I think maybe we're starting to see the market just in the last few days has not really lived up to that. And I think it's now we're into a new phase where we're dealing with persistently high inflation. I don't think whatever the Fed says about that is true. I think, you know, the supply, because it's the supply side that's the problem, supply chain shortages and so on, bottlenecks. I think that's going to persist for some time. Last week's PPI number from the US was exceptionally high at 8.3%. So I think, you know, you're dealing with a market now that's going to look at potentially slowing growth plus persistently high inflation plus a Fed that's looking to taper. So it's going to be, I think we're going to see volatility in the Tyron over the next 2 to 3 months.
I can't wait to see and hear more and more from you, Neil. How often will you join us? Because usually you are joining us every Monday and Thursday, if I'm not mistaken. Are you going to join?
I'll do my best whenever you call. So just let me know, and I'll do my best to join.
Right. Okay. Hopefully, I'm going to see you Monday to Thursday every day at 1400 hours or around that time, around the opening bell. Right. Neil Wilson, everyone. Neil, thank you ever so much for joining us.
Cheers.
And I'll see you in a couple of days. Take care.
Yeah. Perfect. See you.
Right. Ladies, gentlemen, traders, it's time to meet the newest member of the team, everyone. Entrepreneur, trader, and trading coach. Again, from the sunny South Africa. Tyron Scholtz, everyone. Tyron, very good afternoon. How are you?
I'm good in yourself.
Always good. I haven't been this nervous, to be honest. I'm going to be honest with everyone. I haven't been this nervous since I got married, basically. Now, how excited about your first show today? Tell us a few words about your show. What will people be seeing during your talk show, Ty?
So yeah, I'm super excited to do the show. I think people that will tune into our show will see a lot of my technical understanding of how I look at the market. It will also give opportunities for people to do their own research to look at certain pairs. But it's also to give people an understanding of what my thought processes are when I trade. So that thing will be super, super amazing. So yeah, so I'm super excited for that. I have a few things up my sleeve for this afternoon's show. It's starting at 5 South African time. So yeah, I'm super excited.
Awesome. So you're going to be doing the live trading every day, Monday to Thursday, correct?
That's great.
Absolutely brilliant. But I have to ask you something. Do you give investment advice during your live trading shows, or are you soliciting traders to follow you while trading or buy or sell CFDs or cryptos?
No, not at all. I don't give any financial advice or any trading advice. What I do is I'll just share my thoughts and processes on things I'm going to do in the market. People need to know that trading is risky, so they need to make their own trading decision and also look at what they think will be best for them when they do take any trading decisions, but I don't give any trading advice.
Exactly. So, ladies, gentlemen, traders, please note that Tyron is an experienced trader that trades his own money, and he's doing it for demonstration purposes only. So please do not copy his trades. If anyone does that, please understand you're doing it at your own risk. Okay? Trading carries risk. Please know that. And Dot Financial News, its fellow members, directors, and presenters do not hold any liability in case anyone decides to trade based solely on the information that they get during our live talk shows. Okay, trading does carry risk. It carries the high rewards as well, but you need to do your own analysis based on your own personal circumstances. Right, this is it. So, Tyron, we're going to start your show in about 1 hour from now, right?
That's great.
Right, I'm looking forward to that, and I'm sure everyone is looking forward to that as well. What will you be trading today? Can you give us a hint? Currency pairs, commodities, where will you go?
I'll basically focus on currencies today, maybe looking at GBP, JPY, Euro, JPY, that's my favorite two pairs. So I'll basically do a breakdown on what my viewpoint will be for the next day or two, and also look at maybe some of the fundamentals that might influence that two currency pairs. But what I'll do is I'll basically do a breakdown from the first point when I start engaging with the chart to maybe look around where I'm going to take the trade. So it's going to be very interesting and sharing people my thought process, not giving too much away, but enough information for people to understand what I'll look at.
Brilliant. And very, very important, not giving anyone investment advice or encouraging anyone to follow your actions. Okay, please make sure you're going to have a disclaimer at the beginning of every show.
No problem. I'll do that.
All right. I'm looking forward to see you in action, and I'm sure everyone else is. So, Tyron, thank you ever so much for joining us now. Big welcome to the team, to the Financial News team, and I'm looking forward to see your show in a couple of hours. Take care.
Thank you, Andrew.
Ladies, gentlemen, traders, this was it from my side today. Once again, if you like what you see, like, share, subscribe, and support us in delivering more great content. And starting today, we are called Financial News. This was it, guys. Join me again tomorrow, same time, same place, for a new round of Market Talks. And until then, please remember to trade responsibly, and may all your trades be in the money. Brad Alexander, welcome once again. Good evening. Let's see where Andrew Sachs is. Rian Hobson, good evening, Rian. Thank you for joining us once again. There's Andrew Sachs. Good evening, Andrew Sachs, once again. And thank you for being with us. And Chris Thomas. Wow, a full house. I love it when I say it like that. I wish you would all be here in my studio, to be honest. Right. The question that I've held back for the last 45 minutes is crypto versus CFDs. What are we doing? Brad Alexander, the stage is yours. I can't hear you, Brad. What's happening with the sound?
Unmute. You're muted. Right. Yeah, well, we live and breathe the CFD world, and you talked about Eurodollar and so forth. And Socrates just mentioned as well, trading, oil and gold and whatnot. I trade oil and gold. I don't physically have gold bars or barrels of oil in my back garden. If I were to trade crypto, I'd be happy to do it as a CFD. A quick point about CFDs, and maybe contradicting what was just said, the average retail trader will run afoul of volatility. Professional traders can take advantage of volatility and really make, as you say, make some money. This is where the problem lies, is that retail traders don't necessarily understand the big volatility, trading 1 to 5 leverage, and accounts get blown up. So B-book brokers love it. And well, they do, and the trader goes somewhere else. But I'm all for anything to be traded with a CFD. Like I say, we trade the VIX, we trade gold without owning it. If you saw the film, which we've all seen, The Big Short, you can make a market for anything. It doesn't, it doesn't have to exist. You can trade it. So I'm all for crypto and CFD, but getting back to the whole point of this discussion, it needs to be regulated, proper leverages, and very quickly. I know I'm running on here. I don't agree with you, Andrew, about looking at the stock market, the equities behaving the same as crypto, because first of all, there's the fundamentals for equities are vastly different than crypto. Even commodities are slightly closer, I think. But let's face it, when Elon Musk pops up and says this about Bitcoin and it goes up, that's all we have. Mm-hmm. And we can use a bit of technical analysis on crypto. But outside of that, fundamentals really are: someone buys it, it goes up; someone sells it, it goes down. And Socrates talked about the whales, and Chris did as well, keeping the whales under control. So the things that drive the market of crypto in CFDs anyway, or the prices, are still very different than oil versus Walmart versus Facebook shares.
Yes, no, I was only talking about stocks, and you know why? You know about Beyond Meat, yeah, the big not meaty distributor. It's a plant-based one. Now, there were talks in 2018 or 2019. Beyond Meat was newly listed on the market, and there were talks that they might partner with KFC and McDonald's. Do you know what happened with the share price? Went through the roof. When the infamous Elon Musk said that Tesla will accept Bitcoin again for whatever reason, what happened to the price? Went through the roof. So from this point of view, I was saying that cryptocurrencies and stocks are very, very similar, Brad. But anyway, thank you so much for your input.
Yeah, of course.
Next victim on my scope, Andrew Sachs from the heart of London. Good evening. Once again, crypto or CFDs? Are we going to do both? Are we going to just migrate to cryptos? What's going to happen next?
I think for the intermediate time frame, they will remain very separate. I think that certainly quite right about you and Brad just discussing that. I think there's a big difference between any form of stock trading and the framework that it works within and crypto. For example, Elon Musk comes along. He crashed the price of those 5 major cryptocurrencies almost $1 trillion overnight. And that didn't go down $1 trillion because you can't buy an electric car with Bitcoin. It's not because of that. It's because of what he's saying about he positioning himself as an influencer, a self-styled influencer. Stocks and things don't have self-styled influencers. They have the performance of a company and the way that they report their publicly listed, let's say a big pharmaceutical or a big oil company reports its annual earnings, or a bank or something. They've got years and years worth of history to go behind. They look at whether it was better than this year or not. And all their shareholders have meetings about various motions that have to be passed. They've got shareholder responsibility. They can't just do something on a whim. So it's all very, very much a different way of doing things. In this situation with Elon Musk, he comes along, he's not even anything to do with any cryptocurrency at all. So he comes along, just gets on Twitter, says, "Oh, we're not accepting these for payment of electric cars because of the environmental catastrophe that's impending," which is also completely fabricated. And then immediately down goes the price by $1 trillion. Not because you can't buy a Tesla with it. It's because of the impact that everyone thinks, oh, now there's an environmental impact and it's everything. So then he knew what he was doing. He comes along a few weeks later and says, we've spoken to miners and they fixed their power usage now. So it all goes back up again. Stocks don't behave like that. And the thing is, why I raise that as a point is this. You have a totally different way of building a whole market and infrastructure around stocks and Forex and things like that than you do around cryptocurrencies. It's a different operating system altogether. So, for example, you have electronic trading companies, OTC derivatives companies. For the last 30 years, most of the retail electronic derivatives companies around the world have built their business model on zero volatility, no volatility. There's a lot of companies that go, if you look at euro dollar, for example, and the matching engines. If you go to a liquidity provider now, prime brokerage, and you talk about their matching engine and where they get their pricing from, they are doing things on a very narrow margins, very tiny little differences between spreads and things, and they are banking on it that it's going to be 138 for years. Nothing much will happen because these are stable countries that, there isn't much volatility. Whereas with cryptocurrencies, you have to design everything completely differently. It's also operated, and the actual currencies themselves are made by entrepreneurial whiz kids who are looking for the next technological breakthrough all the time. They're not satisfied with inventing one currency, getting it up to a certain point, getting it into the whole infrastructure of the blockchain and all of the proof of concept and the proof of works and getting through all of that. They're not interested in just doing that and say, oh, look, I'm now Mr. Ethereum because I've invented Ethereum. I'm going to sit back now and be the Ethereum issuer, like the Bank of England is the currency issuer of the pound, for example, because in this respect, they're not currencies. They are technological tours de force. They are very, very complex technological tour de force. They are multifaceted. So then what happens is he comes along and designs another one and a new one. They do proof of work. Then they'll get you and everyone else staking and doing the, they'll pay people in the members of the public to stake the new currencies and so forth. So it's a distributed, democratized whole network. You can't have them on the same networks as CFDs. It's not, the two are not compatible. And 4 years ago, these 3 or 4 B-book electronic trading companies tried to offer Bitcoin CFDs, and they got their fingers burned very, very badly, actually.
Yes, because it was very low. I know what happened. But I was referring to trading them in parallel. Yes, so we cannot bury the CFD markets just because we have a new toy called crypto.
I think
this was basically the question.
You would have to trade them on a different. It will be a different type of people doing it, and it will be a different system, and they will operate separately. You'll have CFD companies doing CFDs. You'll have, like Brad said, you can trade now CFDs without owning the actual asset. You don't own the underlying. You're just trading on an off-exchange futures product. That is a separate system to trading or operating cryptocurrencies. You'll find that people doing CFDs in cryptocurrency will only be a tiny percentage of the actual usage of cryptocurrencies. They'll be used for all kinds of other things. The CFD trading will be you probably find that if it was me, for example, I'm not, this is not what I do, but let's say I had a choice of this, I would go and use a smart contract to go and, let's say you're renting out apartments to students here in London, for example. Up comes August, you have a block of apartments, the students come back in August, you sign them all up for their thing they're coming from overseas, mainly China and places like that. They sign it all a smart contract on the blockchain, and then they pay it using cryptocurrency. Then you go and invest that in exchanges.
In a contract.
You just give a contract, but then what you do is you go and invest the revenues from that in a traditional stock exchange. The two are separate.
Fair enough. Okay, Andrew, thank you so much. Chris Thomas. Crypto versus CFDs. This is the question. Are we going to bury CFDs? Are we going to bury stocks and the good old euro US dollar and focus on cryptos? Or what's going to happen? Or we can do both and probably hedge a bit?
I think the interesting thing is that they're both going to exist for a long, long time. You've got such a large CFD and kind of retail trading community as it is, and Bitcoin and crypto will be on the side. And then I think the interesting point is around tokenization and, how that affects all of the markets. You're now starting to see tokenized shares coming into, like, you can trade tokenized Tesla and some of the other ones through some of the crypto exchanges. I think that might well start, once that gets traction in 2 or 3 years' time, I think that may well start kind of leaking into traditional markets and becoming a more interesting product. And then maybe they can tweak it with a little bit of leverage and start turning it sort of more towards a sort of CFD or a future type product.
So we're definitely not burying the CFDs, yeah? They're still going to be around.
Oh, yeah.
No, still here for, who knows, 10 years, 20 years. They've been, I think, been around for 30 years so far. I think GNI created them in London. back in the late 90s.
Right. You made Rian smile because he loves his CFDs. He doesn't want to hear about cryptocurrencies. So you made him smile. I can see a big smile on his face. Right, Rian,
Absolutely.
is it worth asking you the question, crypto versus CFDs, or we already know?
You already know the answer.
Right.
It will take time, but maybe, obviously, for a new generation to come in, obviously my son, maybe if he turns maybe 20 or so, maybe he will be into crypto.
Yeah, but if you don't teach him against it, Rian.
I'm your more conservative dads. I stick to the old guns. You take the chair out for your woman and all of those things. So I'm parallel.
Oh, I do the same. I take the chair out just before she sits down. Guys, to help you understand how much Rian is afraid of cryptocurrencies, if I want to send him on Ethereum right now, he wouldn't get it. He wouldn't have it. He would be like, no, I don't need it. Send me a barrel of oil better. I can sell it. Right, Rian. Okay, thank you for your answer. Right, Socrates. Crypto versus CFDs. What do you reckon? Are CFDs going to disappear?
No, CFDs definitely will not disappear, but I really wouldn't encourage anybody new to this industry to try trading Bitcoins as CFDs. Me personally, I'd rather own my underlying asset, hold it in a very safe and secure place, and maybe sit onto it for 6 months, a year, and hopefully I might make quite a bit of money of it. So that's my take on things. I don't think Bitcoin should be traded as CFDs. I vehemently disagree with Bitcoin being traded as a CFD. It's far too volatile. I think people should be really buying the underlying asset and learn and educate yourselves on this revolutionary technology, which is changing the way of finance and investing. So I see your point, Maria, that you're scared because of the industry, but I think once you actually see a Bitcoin transaction happen and you see that transfer of value without the need of a third party, you really will start thinking, actually, I need to start taking this seriously. We're now seeing between 100 and 150,000 new Bitcoin wallet addresses being opened every day. So there's a huge potential future for cryptocurrency, I believe.
And CFDs will still be around. Yeah,
absolutely, they still will be. Yeah, of course, they will still be around. They'll still be around. Most definitely, they're not going anywhere. These are financial instruments which have been around for a long time. But me personally, I would rather encourage or buy my assets directly and hold them myself.
And maybe hedge it with some CFD trades, if.
Well, yeah, possibility. Depends on how advanced you are, really, Andrew. It really does depend in how advanced you are and what your knowledge is like. I wouldn't really recommend that if you're very new to this industry.
No, judging by your trading style, from what I understand, you talk like a hedge fund manager. But anyway, I've seen that in London. I've heard that in London. I was almost one of them. Right. So, gentlemen, can we all agree or not that the regulation in the cryptocurrency markets is necessary? Yes?
Absolutely.
Absolutely, yeah.
It is urgent, to stop this wave of scams, that took everyone by surprise. Okay? We know that if the regulation comes out, probably we're going to see the volatility, calming down a bit, but still cryptocurrencies will remain probably in history the most volatile asset class. And we agreed tonight that the CFDs should not disappear or did not disappear. And as Socrates was saying, make sure you know what you're doing, basically, before you get involved in cryptocurrencies.
Andrew, can I make one quick point about CFDs?
Yes, please, man.
Yeah,
yes,
obviously we've got lots of places to buy physical, well, again, I use the word physical, crypto, Bitcoin, whatever, through the exchanges, through your wallet. But you've also got a myriad retail brokers who, if they want to offer this to their clients, don't have the wherewithal to make an exchange. They have to provide a CFD. It's that simple. And they can get liquidity on these CFDs from lots of different sources at various different leverages. So you will have CFDs forever as long as retail brokers are still there, because unless they have the wherewithal to set up their own exchanges, which most of them aren't going to do, they're going to want to obviously satisfy their clients who are asking for Dogecoin, Bitcoin, Ethereum, and the only way they can provide it right now is in a CFD.
Yes, fair point. Anyone wants to add anything else? Go on. Closing statements. Anyone?
I just would like to raise a point, because you made these big pictures about scams in Bitcoin, Andrew, and you mentioned the Poly network, but I'd just like to let you know that the hacker has already been identified, his IP address, and so yes, I get it. There's scams in the place, but let's not forget, Bitcoin is not anonymous. It's pseudonymous, and if hackers out there, they will get caught. I've had presentations with big companies who are doing the whole traceability, and it's incredible actually what these guys can trace on the blockchain these days. So scammers on Bitcoin, on the blockchain, hey guys, you're going to get caught out there. They're going to catch you sooner or later. So I think that's very, very good for the industry, these things.
Yeah, very well said, Socrates. Right, Chris Thomas, closing statement.
Wow.
Andrew, if you want, I can get Andrew and you can think about it for a couple of minutes. I know Andrew comes up with stuff like that. He can talk for hours and hours. Right, Andrew Sachs at ETX Capital. Closing statements about the topic tonight.
I think certainly it's very encouraging to see that everyone here who is, all of you here are a very long established FX industry and electronic trading experts that have been around a long time. We all used to work together before there was any such thing as cryptocurrencies or these types of digital exchanges. We know we worked on the traditional type of middleware infrastructure in the 90s. So it's quite encouraging to see that you all agree that these are important steps forward, they are urgent, and that it will serve to make some sustainability for the whole framework of cryptocurrency as time goes on. So I think that is the most important thing. What you can glean from that is that companies that are going already bearing that in mind and making their systems and making their exchanges and fiat on-ramps and things that get you into the crypto exchanges based on the potential that there will be regulation at some point are doing it the right way. The ones who have hastily come in and made hay whilst the sun shines have not done it the right way. The right way is to take your time and build it as though you're building any other financial technology infrastructure from the beginning, from scratch. So I think it's very encouraging that all of you who are all experts in this area have come to the same conclusion, and that's good. So I see potentially the nervousness that used to be around these things. And you remember the days going back 10 years ago, there was guys with bow ties going around places like Argentina where there was capital controls rallying the public and up against the banks and things like that. Those days are gone now, thankfully. It's now a question of building a proper decentralized structure correctly, maybe operating some new e-banks, which will come up, neo-banks, that will be challenger banks and so forth. And we can all take our part in that. ETX Capital, recently we acquired a company called Oval, which is a EMI electronic payments company. So our plans are to amalgamate those companies and go more towards becoming a neo-bank, so to speak. I think that is the way of the future for everybody. So
this, more or less, this is where most trading companies are heading to nowadays. They all want to acquire that license as well. Very well said. Thank you so much, Andrew Sachs. Right, Chris Thomas, closing statement. Pretend you're surprised. Right, Chris Thomas, closing statement about the topic tonight.
Yeah, definitely, Andrew. I think that, obviously we've had a good conversation around regulation. I think it is definitely going to develop, as we all agreed. More and more people are going to come in. Yes, some people will still get caught out. That's part of the development, part of the early innovation. Even in normal mainstream finance, there are still scams. There are still people who don't understand, who get misled, blah, blah, blah. That's just life. We want to obviously minimize that, but we are in an innovative space which is going to explode in the next 3, 4, 5 years. So we've got to do our best to make sure it's as kind of controlled as possible, but at the same time allow this somewhat decentralization to occur at the same time.
Right, very well said. Yes, I agree 100% indeed. Right, the most passionate of us all about cryptocurrencies. Rian Hobson from Cape Town. Right, closing statement, Rian Hobson. Closing statement.
I don't know. With cryptocurrencies, for me, it's just like any other currency. If you go actually with history, like we had tobacco as a currency back in the day, like those days, and gold was backed up by currencies, and all of them were messed up. Tobacco, people plant too much tobacco, the thing got useless. When the gold standard came in, people said, no, we don't have enough money, so they put the gold standard off. There's always someone that's messing up something. So, and I just think, I don't see any difference. It will, at some stage, it will just get messed up. Also, look where we are now. They're printing the hell out of the dollar. So I just think it will all get to another point where someone messing it up. So for now, I think enjoy the cryptocurrency. I think it's definitely a good thing, but I don't see the cancer get removed.
All right. Okay. Fair enough. Socrates, closing words, please. And then we're going to wrap it up.
Sure. So as somebody who works for a fully regulated digital asset hedge fund, regulation for me is extremely high on my agenda, I must admit. And in response to Rhea down there about the US government printing lots and lots of money, Bitcoin fixes this problem. And this is why
double spending.
And this is why we're all big subscribers to crypto. But in just to wrap up, Andrew, yes, regulations needed. It's welcomed. It's an extremely exciting space to be in right now, and I'm very, very proud to be in it. I love it.
Right. Okay, gentlemen, thank you ever so much to every single one of you for making this possible tonight. Brad Alexander, thank you ever so much. Andrew Sachs, thank you from the bottom of my heart. Chris Thomas, I love you. Thank you so much. Rian, I'm glad I had you on board. And Socrates, thank you so much for joining
You're
us tonight.
welcome, guys. Lovely to meet your guests as well. Thank you.
Very nice to see you all.
Yeah.
All the best.
Take care. Cheers. Bye-bye.
Definitely going to do another one again. Have a lovely evening, beautiful people. And I'll see each and every one of you as soon as possible. Right, ladies, gentlemen, traders, this was it for tonight. We had the amazing live debate about the regulation of cryptocurrencies. The questions that we got some answers to tonight were, is the crypto regulation necessary? Is the crypto regulation urgent? What type of regulation are we expecting? What happens with the cryptocurrencies after regulation? And finally, crypto versus CFDs. I managed to have a look at your trading platform, and I saw that you guys also offer ETFs and blends to your traders. Can we please emphasize a bit on that? I know many traders out there are not aware of these extra asset classes. Are you okay with it?
Yeah, go for it.
Oh, so what is an ETF? So as you look at the trading platform, in the left-hand side, where you're going to see all the asset classes, towards the bottom, you're going to see ETFs and blends. Now, Neil, can you please explain for the beginner trader, for the people that don't know what an ETF is, what an ETF is?
Well, an ETF is an exchange-traded fund, and it's usually a basket of particular assets. Now, they could be stocks, or they could be bonds, or even commodities. You have, among the most famous would be, certainly one that's in the news a lot at the moment, is the ARK Innovation ETF, which we offer on the platform. That's ARK-K, or ARKK is the ticker. That one is heavily invested in a lot of momentum names, tech growth companies. It's got about 10% holding in Tesla. So it's a basket of different stocks. But then you also have bond ETFs. I think it's Ultra Shares that do that one. You've got the, for example, they're leveraged ETFs which replicate 3 times the daily move of the US 20-year bond yield. So it's, you've got very specific sort of products here. They're really interesting for finding new ways, ways to trade a particular market theme or story or narrative that you think is going to happen. So if you think US bond yields are going to rise, then maybe these leveraged ETFs, which produce 3 times the amount of price action, if you like, they can be a way to do that. So big choice in the ETFs, and they're quite an interesting way to play particular market themes or sectors.
And is this something that beginner traders could look at, or it's more for experienced traders, Neil?
Yeah, I mean, I think the advantage for beginners traders from this is that it sort of helps compartmentalize, struggling to say that, compartmentalize certain market sectors. So whether it's the tech sector or financials or whatever. So it's a good way to see that, for example, the S&P 500 breaks down into 11 sectors, and there's an ETF for those. So you can, if you think that for example, financial stocks in America are going to do quite well because the economy is going to do well, then instead of trying to find all the different stocks and gaining exposure to, say, a couple of the big names because you've heard of them like Goldman or JP Morgan, you can actually find in the ETF a genuine basket of the whole sector. So that exposes you to the smaller caps, the medium caps, and the more the less well-known names as well. So the XLF ETF, for example, I think that's a ticker for the financials one on the S&P 500. So it allows you to find a particular sector of the stock market. And if you think that particular sector, like, as I say, financials or energy companies might be doing well, then that allows you to trade that particular narrative.
Right. And let's talk about blends for a minute, because that might be a bit more complicated for beginner traders. Below ETFs, in the left-hand side, we see blends. What are they and how do they work, Neil? Is it similar to an index, basically? Yeah,
I mean, a blend is our product. It's markets.com. You can only get them at markets.com. And they're kind of index-like, or they're ETF-like. And we put them together and package them up as a product, a tradable product. So there's the cannabis blend, which consists of a number of cannabis stocks. We've tried to find particular themes. For example, social media. There's a social media blend. There's an e-commerce blend, and so we put together a number of stocks that are correlated in some way in order to give you some exposure to, again, like an ETF, a particular corner of the market or a sector or a theme that you want to trade.
So it's very, very, very similar to an index. Yeah.
Yeah, I mean, it's an index or an ETF. It's very similar to an ETF anyway, to a stock ETF.
All right. In terms of margin requirements and leverage, what are we looking at for blends and ETFs, Neil, versus the standard?
I think, I mean, if you go to the key statistics section on the chart, you'll find it, but I think it's 1 in 5, I think, in Europe, because they're basically you're basically trading stocks. So it's be 1 in 5.
1 to 5. Okay, it's still better than nothing.
Yeah, well, leverage always works well for you on the way up, not so well on the way down, as Bill Huang is finding out.
Yeah, if you are caught on the wrong side of the trades. Now, can you give us any trading tips on ETFs or blends? Like, how do they move PEEP value and other similar things that we should know about?
Well, I would say, you need to watch out for the ones that are leveraged. So they're like I say, like the actually, I never remember the names of all the titles, but the leverage 3 times the daily movement of the US 20-year bond yield. That's starting to get into territory that is maybe not for the beginner trader, for example. And so be looking for, you want to look really for an ETF or blend that plays into a particular sector or theme that you understand, that you think you understand anyway, and that you want to try and trade. So, for example, as I said, financial is a good example. Rather than just putting all your eggs in one basket with Goldman Sachs, you can diversify by investing in the ETF or trading the ETF. But they behave just like any other basket or index. They you have weightings, and therefore one stock might have an excess weighting, like Tesla on the ARK Innovation ETF, for example. If Tesla moves a lot, then ARK moves with it. Simply because of the weighting. So you need to pay attention to the weightings. Some of the weightings on the blends are heavily skewed towards 1 or 2 stocks, and then there's a few more stocks that maybe have a tiny weighting, so be careful of that. But yeah, they behave like any kind of basket of stocks, really.
Okay, so they mostly trade about 8 hours a day. Yeah, we're not going to see an aggressive movement or swing like we see in currency.
That's right. Yeah. So they'll only trade during cash equity hours, and with the bulk of these being US focused or US listed, yeah, you're only able to trade them sort of from roughly 2:30 in the UK to around 9 at night, the US cash equity hours.
All right, understood. What starting amount would you say is recommended if you want to look at ETFs and blends and bonds and all that? What would you say? I mean, can you do this? $50 or $500?
Yeah, I mean, our minimum deposit is $100 or €100, £100. So, that's the minimum that you can trade, and with that, you could open a position of 5 times that. Well, not quite 5 times that, but something in the region of 5 times that. So, that'd be a decent start. You don't want to be risking too much to start with, and it's always pays to have a good amount of education first.
Yes, exactly.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Hi, my name is Brad Alexander, and I'd like you to join me every Monday at 1700 London time for Brad's Eye View here on Financial News. This will be an interactive hour with opportunities for you, the trader, on FX, commodities, and indices, and maybe even a bit of crypto if they let me. See you then.
InstructFX is providing free consultation and free education, not investment advice, guys. We are not giving investment advice.
This is where the problem lies. Is
Bitcoin fixes this problem.
Binary options, when they came out, were actually, I believe, a legitimate investment or trading vehicle.
The United States that's actually looking at it. So it's all about having some framework for electronic monitoring of systems. That is very important.
For me, that is where the difficult question is going to come in, under what asset class is going to fall under.
And that's, there's a lot of good people there, but there are a lot of people who are sitting, taking it easy.
It will just get messed up. Also, look where we are now. They're printing the hell out of the dollar. All of them were messed up.
It's been like Scotland the last 2 months, I tell you. It's been raining literally every day until 3 days ago.
This is where the problem lies.
So naturally, yes, we will still see these crazy moves.
Yes, regulations needed. It's welcomed.
Retail traders don't necessarily understand the big volatility, trading 1 to 5 leverage, and accounts get blown up. So,
all of them were messed up.
And also, as I say, as the pension funds and all the asset managers come in, and the real retail money, they're going to come in a safer environment.
Bitcoin fixes this problem.
Necessarily understand the big volatility, trading 1 to 5 leverage, and accounts get blown up. So B-book brokers love it.
Are we going to do both? Are we going to just migrate to cryptos? What's going to happen next?
This is where the problem lies.
Bitcoin fixes this problem.
This is where the problem lies.
Bitcoin fixes this problem.
This was it from my side today. Join me again tomorrow for a new round of market talks. If you like what you see, like, share, subscribe, and support us in delivering more great content. And remember to trade responsibly, and may all your trades be in the money.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX.
Happy Tuesday and welcome to Trading Live with Tyron. Scholtz. I'll be yours for the next hour between 5 and 6. Before we continue going forward, I would just like to say all information that will be shared on the show today is not for any investment advice. Please take note that all trading decisions you make on your side needs to be confirmed by yourself, and you need to be comfortable with that. So on today's show, we're going to do a few things. Number one, we're going to look at all the trading ideas and setups I shared yesterday to see how the market reacted to it. And then we're also going to look at a few new setups that I looked at today. I'll explain it. And that's today's I would like to take to in the New York session and tomorrow, but we'll continue if we come back from the ad break. Welcome back to Trading Live with Tyron Scholtz, and I'm the host of the show between 5 o'clock and 6 o'clock. So today, a lot of news came out, and CPI news actually moved the market. So we're going to look at how the market reacted to my trading setups that I analyzed yesterday live on the show, and we'll see what trading opportunities is available based on that, or for what still is to come. In a few seconds, I'll just share my screen and then we'll look at my analysis from the day before. So today we'll look at the previous setups that I analyzed yesterday, which was GBP JPY, GBP USD, Euro JPY, and USD CAD. We'll also have a look at the DXY because the DXY is my main indicator to what the dollar will do and the strength of the dollar. And then we're also going to look at NASDAQ. For South African traders, that's one of their favorite pairs, USD ZAR and gold. So firstly up, we have GBP JPY. Now, yesterday when we looked at GBP JPY, for the purposes of this example, I left my analysis the same yesterday. I didn't change anything because I wanted to be consistent at what my forecast was to this particular pair and how the market plays out. So yesterday price was trading in between the price level of 152.006 and also 152.650. And my one prediction was if price breaks below this area, we also see nice bearish momentum breaking because it will break this key level over here, which is a support area that will then turn to resistance if price closes below, and it will also break this uptrend line, this trend line over here. So as the New York session opened, we saw a lot of bearish momentum stepping in to this GBP JPY pair. Here we can see that the market we're actually holding in between these two price areas for quite some time. What I like to do when I do my analysis, I like to look at the amount of candles that performs within two, for instance, key levels, and see whenever momentum steps in, the candle that has the momentum will basically take out all the candles within that particular space. So if we look at what price did over here, there was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There was 10 4-hour candles within this two price areas, and the markets basically, with the market open, just basically traded below this. Basically, to me, this looks like a mini crash. So the market actually had a nice bearish candle over here, and if the 4-hour candle, there's about like 1 hour and 55 minutes left of this candle. If this candle closes as strong as it is, we might see more bearish momentum. But to me, this is great because now I can then start looking at taking this trade. But one thing that I still want from the setup is for a clear break and retest. Please make sure that whatever information I say on this is only for administrative purposes, only to show you guys, for demonstration, purposes, but it's not for any financial advice. So please make sure whenever you take any trades, please do your own research and feel comfortable with your own research. Please also take note that trading is risky. So please do make sure you do your own homework. So yeah, so on the 4-hour chart, we saw a nice bearish drop with the latest 4-hour candle that opened, and this is a very strong candle. If I see a nice closing below this price level 152 area, I'll be happy to look at selling GBP JPY, but I will have to look for a nice pullback to the zone. What tends to happen when the market gets nice big candles, it tends to always come back with a lot of choppy candles just to stabilize and normalize the movement, because the market don't actually love a lot of big candles. So yeah, so based on yesterday's analysis, this is really a good setup. If we move to our lower time frame, one thing that's really interesting to me is that the fact that over the last 2 hours, the market dropped over 100 pips on the SPY. This is really something very interesting, and this has a lot to do with the fundamental side. Now, this is a clear example when someone tells you that the fundamentals are the driving forces of the financial market. Here we can clearly see when the fundamentals came out, the CPI, there was a lot of other news as well, that this has a direct impact on the technical approach as well of what the market will do. So the market dropped over 100 pips in less than 2 hours, because the 1 hour candle formed now. So that's super interesting. So on the GBP JPY side, I would like to get a nice clear break here to below, retest to this area if price closes below. So the next important thing for me will be to see, is this 4 hour candle closing below price level 152? If it does, we can definitely see some more bearish movements on this particular pair, which will also indicate a nice clear break on the bullish trend line, which will get more continuation. I'll really focus on this price level over here, because the market also found multiple support areas. Support on this particular zone. It's also a nice psychological area of 150.5 sorry. So this will also be a nice exit point for me. So what I'll expect for the market to do now is, if it closes below, that's super important. I'll wait for the market then to come and give me a retest to this particular price area over here, because then this will be a proper break of structure with a retest, and then we want some continuation. This will probably be, if I take this trade, this will probably be, let me just quickly see, just above that previous resistance over there. Well, yeah, so this is risking about 36 pips to gain about 144 pips, which isn't a bad setup. If you look at your risk to reward, it will probably be about 1 to 4, 1 to 5, which is not too bad. So yeah, so I really want to see a nice clear break below this, and then I'll want the nice pullback for some nice continuation. But from a GPP point of view, as predicted. So that's why patience is so important when it comes to trading, because it's one thing to identify proper setups and look at the structure, but it's also another thing to implement whatever you are looking at over a longer period of time. And you need to know what you look at before you take a trade. The next pair that we're going to look at will be GBP USD. Now here, yesterday, I said the same thing. Now yesterday, I was more a bit bullish on this pair, but with the outcome today, I'm a bit shaky, because my DXY predictions yesterday was a bit bearish. And that's why I started seeing the pound maybe strengthening. But if I look at what the market is doing today, with the news, we had a clear break over there, a nice clear break on the 4 hour. But what happened afterwards, because I clearly said that if price breaks below this area over here and closes and continues going up and come and give me a pullback to retest this area, I'll be happily to sell this. But if I look at things now, I might stay out of this, because the bears has been stepping into this pair. Like if you look at your 4 hour chart now, this bearish candle has easily been dominating this bullish candle. If you go to your 1 hour chart, you can clearly see what the market has been doing here. The market took out this whole buying candle, which to me says there might be a transfer when it comes to the momentum on this particular pair. But for now, I'm going to stay out of this, because I really don't like the price action I'm seeing here. to me, it's very important to have a clear bias on what you want to do. And if the market provides you with something else, then rather stay out of that, just to rather change your bias, because that brings in confusion and it will make you uncomfortable when you enter the trade. So I'd rather stay out of this one. But there was a nice clear break. I was happy when I saw the break. But with the next 4-hour candle that opened, the market just pushed through very, very aggressively. So I'm going to stay out of that one. So yeah, we can see, I'll see maybe when price comes to 1.3800 price level area to see if it breaks or holds. But if it breaks, then we can maybe see that the market rejected over there once, twice. So that's a double top. Maybe we see a triple top. But this price area is very important, because if price breaks below this, that means that the structure of this short-term bullish momentum will be taken out completely, and then the market will then continue dropping lower. But for now, I'll stay out of GBP USD because my analysis was a bit off. The market didn't respect it, and that's quite fine. The next pair that I just want to review will be Euro JPY. Now, Euro JPY performed as predicted. So yesterday when I analyzed this pair on the show, I was saying that if I can get a nice clear break and retest on this the structure over here, this is a nice resistance that turned into support. Market broke trend line. It was a nice short scalping trade, about 36 pips, risking 9 pips. There's also about 1 to 3 risk to reward ratio. Market just wicked off this area. I really anticipated that the market will find resistance in the zone based on the structure on top as well. If you know your reversal patterns, you will identify this as a double top formation. Here the market clearly broke the structure over here, retested and retested for a second time. So I'm a bit more bearish now on Euro JPY. For me to engage in this trade and for momentum to continue going lower, I need a clear break of this the key level over here. If I get a clear break of this, that means that this reversal candles over here is also being taken out. That means that the market is then performing lower. But usually what happens after the market drops heavily, the market will always give a bit of choppy candles. And here you can see the same thing. Market dropped heavily, gave a bit of the choppy candles, came to this key level over here where the market previously rejected, and then it broke through again, retested for a second time. So if I get a nice clear break over here, I would like to start selling this pair below this key level area, but I need a bearish candle to close below this. Because most of my analysis is predominantly based on the 4-hour, I would really need a 4-hour candle to close below this key level over here. If that happens, we will definitely see some more bearish momentum, and this will definitely be an exit point where I would look at to exit the market. You see, the one thing that I always trade with, I have one in what do you call it? I won't say philosophy, but there's one rule I trade by. Always finish your trade before you start your trade. And the reason why I always live by that is because if I find a perfect entry spot and I don't find a perfect exit spot, I fail to do proper analysis on my trade. So this will be a definite proper exit spot because of where the market tested previously. The market like to test previous zones in previous areas. So I like to use that as my exit areas whenever I enter within a trade. So yeah, so your Euro JPY, good 34 pips trade. They was definitely trading against what the structure was doing, because if we clearly can see what price is doing here, it is bearish. So here we can definitely see some nice continuation with this bearish candle closing. If I get a close below this price area, I'm definitely looking at selling. So this will be a pair that we'll look at tomorrow as well. Tomorrow we'll still have to show same time, same place at 5 to 6. So I will definitely look at this pair as well. Now the last one from yesterday will be USD CAD. Now USD CAD, I was also bearish on due to the DXY being bearish yesterday. But remember, when I look at the DXY, I look at it from 2 point of views, from a short-term point of view and a long-term point of view. Now, from a short-term point of view, the DXY was a bit bearish yesterday, and that's why we got some nice selling momentum from this key level to this area. So the market found nice resistance, and I still identified this yesterday. But if I look at what price are doing today, actually when the CPI news came out, the market attempted to break this key level. And immediately when the next 1 hour candle opened, price basically just shoot back down. So that means that there was a fake break to the downside, and there was no real momentum to take price lower. Whenever news events come out, a lot of traders, you don't know what the news event are going to do. Yes, we do our research and whatever, but you don't know what the news are going to do. So you always need to wait till the news comes out. So that gives a bit of uncertainty. But as we can see here, the market came back very, very strong. If we get a proper 4-hour close, a 4-hour bullish candle close, that means that there's a lot of momentum. Because if we look at what price are doing at this current price area over here, we can look at where this week are to where this week are. We can see here is 6 4-hour candles. This means that the market operated in this zone for a whole day, and then one 4-hour candle opened and it took out 6 4-hour candles. That to me is a shifting momentum. So whenever I see nice big candles take out previous candles which is in the inside of that candle, that is a lot of shifting momentum. So this is a clear shifting momentum in terms of buyers. I'm very excited to look at the DXY to see what the hell is going on the DXY, because if we get a clear look at the DXY and see what the potential movement or the future movement will be for that pair, we can definitely see where USD CAD or GBP USD will go to. But yeah, now at this current time, I'm not looking at taking this trade. Why? In order for me to take any trade, I'm a trend-based trader, so I like to trade on markets that's continuing. I don't like trading ranging markets because the market tends to trap you a lot of times within the middle of that, and that's very, very frustrating for a trader. So I like to see a clear break above. If we get a clear break above, we'll definitely see some continuation. But the most important part of seeing a clear break of structure is to wait for price to provide you with a retest. Now, when the market gives you a retest, we'll definitely see some nice support coming in and then pushing price lower, because otherwise we might see the same example as that what happened at Euro, the GBP JPY. Market broke through. Market didn't provide you with a retest. The next candle came and basically just hammered price to the downside, and that's not what we want. We want to see real clear price action and how the market supports the key level areas. So yeah, here we can clearly see that the market basically nicely broke through. You can definitely see, if we actually want to draw some nice trend lines as well, we can definitely see here that the market provides us with a nice bearish trend line. If we get a nice clear break of the trend line and the key level, there will be a lot of momentum shift over here, and that means that the market will take out all these I always call it inside movements, because the market created that high over there, created that low over there on the 4-hour, and price was trading in between. To me, that's a bit of ranging. But if the market breaks, that means that the market is breaking that range, and the market is then continuing going higher with a nice clear break of this downtrend line, this bearish trend line. So the DXY, let's look at the DXY for a second. Yesterday, we identified that price was trading in between these two areas as well, 93 and 92,500. But now I also say that if price comes and tests 92,500 and finds some support, it will definitely push the dollar up. But one thing we can definitely see is that price tried to, how can I say, it broke the support area of 92,500, but it didn't close there. Now that is very important. Now what I would like to see on the next 4-hour candle is, will this next 4-hour candle fall this week? If it does fall this week, we can definitely then anticipate more bearish momentum on the DXY. So that means that all bullish momentum we see here, we see currently now on the charts like GBP USD and USD CAD will be short-lived. So then we will see continuation of the Canadian dollar strengthening against the dollar, and we'll also see the pound strengthening against the dollar as well. But if price closes below, we can definitely see some momentum. Now, if we go to our lower time frames, we can get a better look at what price wants to do. Now, there's something I picked up recently where it speaks about mitigation. So whenever the market gives you a lot of big bearish or bullish candles, it will always come back to mitigate at least 50% of what that candle did. That is just to normalize the movement. And here we can definitely see something like that happening. But that can only be confirmed if we get a continuation of bearish momentum breaking through 90 to 92,500. Then we can maybe see price maybe approaching 92,200, which will be the next big support area on this DXY pair. So here we can definitely see the DXY being active, and as we are currently now in the New York session, so we might see a bit of more movement on this pair. But if we get a nice fall of this DXY, I'm definitely still bearish on the dollar. But the fundamentals definitely played a big part on the pairs today. As we can see on GBP JPY, over 100 pips per day. And let me just quickly go back to that. And the reason why I would like to go back to that is because there's one thing I always teach my students as well, is to always look at what the average pip movement is for a pair per day. Now, whenever I do this, I like to use my session breaks. Now, my session breaks provide me with the closing of New York and the new open of New York. And here we can clearly see it. This blue lines over here is opening of New York and closing of New York. So it's basically open and open. So here we can clearly see, if we take this low to this high of the day, we can see it's about what? Say about 45 pips, 46 pips. Let's quickly do this. 45 to 46 pips. If I use this the day after that, I'd use that high to where was the low? The low was over here. The market gave you about 95 pips. The day after that, the market gave me about, say, another 74 pips. Another 63 pips. So as we can see that these times where GBP JPY provides you with about, say, 95 to 100 pips. But if you look at the other days, you can see the market gives you about 63, 74 pips, about 45 pips. So this is definitely a day with big movement. And that was definitely due to the fundamentals. So here we can see now clearly price broke through now. But if you go to our 4 hour, I really want to see it closing below. Yes, price might operate there, but there's still about 1 hour, say an hour and a half left for this candle to close lower. So we'll definitely see some movement. Please note, all the information I see is only for demonstration purposes and it's not financial advice. But we'll go look at gold, NASDAQ, and USD ZAR after the next ad break. Welcome back to Trading Live with Tyron Scholtz. So let's go have a look at our NASDAQ pair, gold, and also USD ZAR. South Africans love trading NASDAQ. I don't know why, but they love trading NASDAQ. So let's go have a look at that. And please remember that the DXY, the dollar is always versus gold. So there's always, when the DXY is weak, we can always see a lot of strength when it comes to the dollar. But let's go have a look at what the next few pairs have to offer for us. So firstly, we will look at our dollar pair. Now, let's see what the dollar provides. Let me go to my daily time frame. I would like to analyze this pair from scratch. Now, if I like to zoom out, the reason why I like to zoom out is because I really want to see the bigger picture. I don't just want to see what the market is doing in this current week or 2 weeks or 3 weeks. I would like to see over a period of 5 months or even a year how price has been performing. We can clearly see we had a nice uptrend started in August 2018 and the market has been going bullish on this. We got a nice correction movement over there, and we had an all-time high, which was at price level $2,074. So I want to identify that. Now, the reason why I like to identify the all-time high, because the all-time high always gives us an indication of where price aim at if it moves higher for the next price level to break. Now, the way I look at all-time highs is the same like someone looking at the Olympics. When someone runs at the Olympics, they will always run to beat the world record because it becomes a new target. Now, if we look at gold created a new record of $2,074. So for price to continue moving higher, it needs to break that barrier. Now, after price created this high over here, we saw some bearish momentum, or we call it as a pullback on the spread. Now, the reason why I look at it as a pullback and not as a directional change is because price has been bullish since 2018 August. Now, if we see that, we know that in order for price to continue going higher and continue breaking higher highs and creating all-time highs, it needs to take a break. It needs to reset. We get different seasons, get different political events, and all that has an influence of the operation of a pair. Please, before I continue, please also just take note that I'll always say this. All information shared on the show is only for demonstration purposes. Please do your own research if you want to take trades based on all the stuff we analyze and explain on the show. So here on price level $1,680, we could see the market found a lot of support in this particular zone. So here I can identify this as a nice support area. Now, after price found support in this particular zone, we could see that the market rejected from it and started moving in the opposite direction. Now, what we also can see is that the market basically is in a slight hold in this area. If you look at this, that's happening over here. Now, why do I say that? The reason why I say the market is in a hold, because this was a high area created here, this was a low area created here. And from a trending point of view on a shorter time frame, the market is ranging in between. What is this price level over here? $1,920 and $1,680. Now that we know that, we need to go look at what the market wants to do. So here we can clearly see, if we look at your trend lines, we can see that the market created a nice bearish trend line over there. You can even do this over here. I don't think the trend line will work because I don't like forcing my trend line on the chart, which is fine. So now we know that the market created this high over here. So this becomes our target that price wants to take out if price moves to that particular area. And we also see that the market finds support. Now, what we can pick up is that price found support multiple times in the zone. Now, this price area over here is also super important because from a shorter time frame, the market rejected from this area multiple times. Here we can see the market rejected multiple times. So what we can anticipate is for price to maybe come and test this area at $1,831. If it does break through, we can definitely see price come and testing the area of here over here, which is about price area, say $1,915. But this will all depend on the strength of the dollar. If the dollar is weak, we can definitely see a shift in gold prices moving higher, maybe testing the all-time high, or maybe breaking it. But if the dollar price becomes stronger, we might see a drop below the $1,680 mark. So if I move to my 4-hour time frame, I can see a bit more price action movement because on my daily time frame, it takes a whole day for that candle to fall. So it takes a longer time for the market to basically provide me with candles. Unfortunately, we are retail traders and we don't have the time to wait a whole day for a candle to fall to make a trading decision. So now what we can do is we can see the market found nice support over there. As you can pick up, I don't like using indicators. I like to look at the price itself to see if the market is providing me with opportunity, because I always believe that I'm the best reactor to what the market wants to do based on my understanding of it. So here we can also see that on a smaller time frame that the market found also support on the $1,780 mark. And this is what immediately happened. So when the news came out today the market basically spiked till this support area over here, just wicked off and went in the opposite direction. Now, one thing that I'm very scared of is whenever I see news come out, I step back because I've always gotten it wrong to trade from the news. And I don't want to take a gamble. I like probabilities being in my favor in terms of price action. So here, I can clearly see that the market found nice support. So the next area I would look at will be this nice price area over here to see if price comes to the zone and find resistance. If it doesn't find resistance, we can get a nice clear break above this area and then maybe break the 1,840 mark, and then price will then maybe continue going to 1920 per price level area, which is also our all-time high. Now, as we can clearly see here, that if you look at gold on the 4-hour, we can definitely see a big ranging market because the market isn't moving lower, it isn't moving higher, it's just moving in between these two key level areas where it's finding support and resistance. So what I think gold might do, if it breaks above, that was really a great setup if you think about if you entered over here. But if we get gold pushing up higher and we get a nice clear break over here, this was really a good setup. Maybe to this key level over there, nice 52 pips. But if we really get a clear break on gold above this area, we can definitely see some continuation, and then we can see price maybe approaching the 1920 price level area. Now the next chart that I'll look at will be my USD ZAR chart. Now, I don't like trading USD ZAR, but just for the show purposes, I'll analyze it because one thing I've picked up, USD ZAR is an exotic pair, and exotic pairs have ridiculous splits. And unfortunately, I can't lose money on splits just because I want to trade my currency because I live in the country called South Africa. So if I look at this pair, I can see that it made a massive retracement. Now let's zoom out. Let me go to my daily time frame. There we go. If I zoom out, I can definitely see that that USD ZAR is bearish. Since April 2020, we saw a nice double top movement forming at the price level 19 Rand 17 cents. And after that, we saw a lot of bearish momentum stepping in, and then basically a bearish trend started happening. And here we can clearly see that price came from 19 Rand 10 cents or 19 Rand 34 cents, and it basically came in June the 7th this year. It basically came to 13 Rand 31. Now, what we can see after price created this low, the market hasn't been trading above the 15 Rand mark. Now, that to me is very interesting because usually with all the stuff happening in South Africa, to me, it's very funny to see that the Rand is actually strengthening against the dollar. Now, what I can definitely see in this current pair, I can see that the market finds support in the zone. Now we can see a nice level of support in this area. And now we can also see there's a nice level of resistance in this area. So wherever price are currently trading at now, I know I've put these bubbles here as well because I like just identifying what I see. Now, if I zoom in, there's one thing I can pick up is that number one, 1, 2, 3 daily candles with no real body was formed over the last 3 days. But today, with the news and with the DXY being a bit strong, I can see a nice bullish candle stepping in. But now, for me to identify the bullish candle, it doesn't mean that the market is actually giving me indication that it's changing direction. That's the one thing I need to take in consideration. What I really need to see is, can I get a clear break above this resistance zone? If price breaks above 14 Rand 40 cents, we can definitely maybe see some support, or maybe breakthrough, get some support, and price maybe attempting to go again to 15 Rand. But with USD ZAR at the current moment, I want to see a nice clear break. If I don't get a nice clear break on USD ZAR, then we will definitely see more bears coming in and maybe price coming again to retest per price level 13 Rand 40. But if I go and share quickly my fundamental calendar, we can definitely see today was a busy day when it comes to our fundamentals. There was a lot of news when it came to Australian dollar. There was a lot of news when it came to the Great Britain pound. There was some euro news and also the USD news. And here we can definitely see, if you look at our core CPI numbers, it came out worse than expected. And this is a result to why the dollar, for instance, when the news came out, just started dropping. Here we can also see your core CPI came out, was previously 4.3%, and it came out now at 4%. So that means that the dollar, now to me, that brings clear confusion. Because the moment I see that, I can basically see that I get a bit confused when I start seeing that, because to me it's like, why is the news data bearish, or why is it negative, or it comes out worse than expected? But then I look at the chart, then the chart performs a bit different. So whenever I look at that and I don't get clear confluence in terms of what I see fundamentally to what I see technically, I don't take any trades, because I want to take trades with clear understanding and clear, how can I say, understanding, as I said, and knowledge to say, okay, cool, I see the market is being bearish from a fundamental point of view. I also see it being bearish on the chart from a technical point of view, and it makes sense. But the moment it doesn't make sense, I don't like taking any trades. But before we continue, please stay tuned. We'll go on a short ad break, and I'll be back. Welcome back to Trading Live with Tyron and Scholtz. So yeah, before we end the show today, let's just go back and look at some of the charts we looked at today and did some analysis on, and then we'll wrap it up for today. So let me go back to the chart. So yeah, my conclusion on USD for today will be, if I get a nice strong bullish candle closing around price level 14.40, I might consider buying this, but other than that, I think the bearish continuation will still continue going lower. And the next pair will be NASDAQ. The same with NASDAQ. Now, NASDAQ, I would like to explain before we end off the show today. Now, when I look at NASDAQ, to me and my understanding, NASDAQ is a bullish market. And let me not just say that. Let me show you. If I zoom out, whatever you see is the market is creating higher high after higher high after higher high. If I zoom out more, we can just see more higher highs being created. It's almost like ever since Nasdaq got created, the prices went from high to high and higher. Now, if we focus on what price is doing at where it is now immediately, there's a lot of things that we need to consider. Now, one thing that really made me a bit, how can I say, not confused, but something that really has been triggering me about Nasdaq, and I don't know if this will have some influence or will do something in the near future, but this massive ranging market. If I put up, like, we can look at this, we can see since August 2021 until today, September, until the 10th of September, the market was ranging. And now we got a clear break of this ranging market. Now, the one thing that I want to see on the screen is, can this chart, or can price trade below the support area? If that is the case, we can definitely see a lot of bearish momentum when it comes to Nasdaq, because Nasdaq has been bullish for a long time, and usually when things are going up for a long time, it usually bursts and a bit. It's a bubble that bursts. So here we can clearly see that the market broke the structure over here. To me, a loading phase is when the market accumulates a lot of buyers and sellers into two parallel lines, and this is the case over here. This means that the market is loading. Now, to me, it can either be some continuation, breaking into a new higher high, or the market can basically reset and start selling off more. Now, we got a structure being broken over here, and we got a retest. Now, before this, I saw a very, very strong bearish candle, but as we can see now, price is pushing up again from the support area over here. If we can get Nasdaq, or if Nasdaq, because the market doesn't care about what I think, if price breaks below this area over here, we can definitely see some more selling momentum stepping in and maybe getting a nice retest of this support area over here. This resistance turning into support over here around 15,200 price area. So that's my next focus area if we get a nice clear break over here. But if not, we can definitely see some more buying momentum stepping in. But now the next question will be, is price breaking this resistance now? So if price rejects from this, we might see more selling and then price breaking the support. But if not, we will maybe see price going back into this consolidating box and maybe breaking the high. But we'll see as the week progresses what Nasdaq will provide and what it will do. But Nasdaq is really a highly traded indices in South Africa. A lot of traders are trading it, and they're only trading that. And I understand because of the movement. You know, if I look at this 1 hour candle, I could see price moving over 103 pips, and that was in 1 hour. And at the same speed, the hour later, price did the same, almost about 95 pips. So Nasdaq likes to move, and people like to make a lot of money on that. But please note that all information being shared on the show is only for demonstration purposes and not for you to make any trading decisions on. Please note that that was the show today. If you really like what we share and information we give, please interact with us, comment in our comment section, and please don't forget to like, subscribe, and also to share. And I'll be back tomorrow, same place, same time. Please don't forget 5 till 6 every day with me, Tyron Scholtz, and please have a lovely day going further. God bless. Bye-bye.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Hi, my name is Brad Alexander, and I'd like you to join me every Monday at 1700 London time for Brad's Eye View here on Financial News. This will be an interactive hour with opportunities for you, the trader, on FX, commodities, and indices, and maybe even a bit of crypto if they let me. See you then.
InstructFX is providing free consultation and free education, not investment advice, guys. We are not giving investment advice.
This is where the problem lies. Is
Bitcoin fixes this problem.
Binary options, when they came out, were actually, I believe, a legitimate investment or trading vehicle.
The United States that's actually looking at it. So it's all about having some framework for electronic monitoring of systems. That is very important.
For me, that is where the difficult question is going to come in, under what asset class is going to fall under.
And that's, there's a lot of good people there, but there are a lot of people who are sitting, taking it easy.
It will just get messed up. Also, look where we are now. They're printing the hell out of the dollar. All of them were messed up.
It's been like Scotland the last 2 months, I tell you. It's been raining literally every day until 3 days ago.
This is where the problem lies.
So naturally, yes, we will still see these crazy moves.
Yes, regulations needed. It's welcomed.
Retail traders don't necessarily understand the big volatility, trading 1 to 5 leverage, and accounts get blown up. So,
all of them were messed up.
And also, as I say, as the pension funds and all the asset managers come in, and the real retail money, they're going to come in a safer environment.
Bitcoin fixes this problem.
Necessarily understand the big volatility, trading 1 to 5 leverage, and accounts get blown up. So B-book brokers love it.
Are we going to do both? Are we going to just migrate to cryptos? What's going to happen next?
This is where the problem lies.
Bitcoin fixes this problem.
This is where the problem lies.
Bitcoin fixes this problem.
This was it from my side today. Join me again tomorrow for a new round of market talks. If you like what you see, like, share, subscribe, and support us in delivering more great content. And remember to trade responsibly, and may all your trades be in the money.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX.
Hi, my name is Brad Alexander from FX Large, and I'm sitting here in front of a picture of the City of London. I get asked by brokers all the time, why use video? What's the point? Well, let's start with what. You've got webinars, market updates, platform education, and trader education with quizzes, all designed to attract, motivate, and retain your clients. So, why is this better than any other medium? Let's take a look. Video produces far higher click-through rates and share rates in emails and social media campaigns. Viewers are 10 times more likely to comment, embed, engage, and share a video than any other type of content. 65% of viewers will click through to your website. Video added to your website can increase the chance of a front-page Google result by 53 times. Videos on a landing page can increase conversion by 80%. YouTube is the second largest search engine in the world. Think about it. Also, 50% of searches are done on mobile phones. Lengthy text is not always easy to read on a smartphone. Videos, especially videos with captions, are the perfect medium for smaller devices. I could go on, but I'm following my first rule of production: keep it short. To summarize, increase your market penetration dramatically with videos in your campaigns. Make your salespeople more effective and professional, armed with videos to close the deal. And let's not forget customer support, who can cut out hours of phone calls and emails with simple how-to videos. If you want to learn more, just click here and I'll see you on the inside.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.